Welcome back to Winning on Taxes. We're going to be talking today about filing compliance and what does that mean? So if you're looking for what should I do first with the IRS, this is it. So filing your tax returns and becoming what's called filing compliant is the first thing you need to do when working with the IRS. So next thing is paying your taxes and making sure you're not going to owe taxes moving forward. So we're going to talk about how many tax returns need to be filed, how do you determine which tax returns should be filed, and some exceptions to the rule. So again, that's all kind of figures into the same thing of how to know how many tax returns you should file and how to get what's called filing compliant. So one of the big things is, there are exceptions. Everything we do at the IRS, there are exceptions to the rule. Now, this year, in 2025, you have a standard deduction, which basically for one person, it's a gimme. You get up to $15,000 of income excluded from being taxed. And that's called the standard deduction for one person. For a married couple, it's two people at $30,000. So that's a huge benefit. Most people are using the standard deduction because they can't itemize and save more money. So if you're making less than $15,000 as an individual or $30,000 as a couple, you don't have to file taxes. And when that income is reported to the IRS, they'll see that. But where people really get in trouble is where they don't know what's taxable, what's not. So that's what I really want to focus on. So it doesn't matter if you have multiple sources of income, husband, wife, if it adds together to more than $30,000, you have what's called a filing requirement. Now that's for taxable income. So what all is taxable income? Pretty much everything. So if you're not sure, it probably is taxable. Social Security is taxable. Now, both Harris and Trump ran on making Social Security not taxable, but Congress hasn't passed that yet. So we'll see what happens for tax year 2025, but going backwards, it definitely is taxable and figures into your total income for a given year. So, and people can get really frustrated by that, and it's hard to wrap their head around. Why am I being taxed on a government benefit that I paid for my whole life? Well, complain to Congress. That's the best way to get that addressed. So what are some things that aren't taxable? When you get disability benefits to compensate you for injuries, for actual harm that you've suffered. If you get disability payments to replace wages for pain and suffering, I mean, those kind of things aren't really making you whole physically. And especially if it's replacing wages, the wages would be taxable. So the disability insurance covering those wages can also be taxable. Check with your CPA. Make sure you have the right information. Disability attorneys do not know. They don't deal with this. They pass that all on to the CPA. Some of them are smart enough to ask beforehand. But many times people get these disability payments or chunks of money, and then they have to pay taxes on it as well, which is frustrating. VA disability is not taxable. And there are some other sources of income that aren't taxable, but they're the exception. So ministers or employees of churches that are just in a preaching capacity can be tax exempt. So there are exceptions out there, but the biggest exemption is VA disability for veterans. And that's because Congress has chosen to make it not taxable. So if you have enough income, it's over $30,000, and this is cumulative income from all sources, you need to file your tax returns. Now they've softened a little bit on this, but if you're self-employed and you have more than $600 in self-employment income, the IRS will tell you you have to file. Why? Self-employment taxes. So if you only make $10,000, and if someone else is working, they're going to have self-employment taxes withheld automatically, and that's for FICA, Medicare, Medi-Cal, or for state Medicare. So that's automatically going to be withheld, and the IRS wants anybody that's self-employed, even if they don't make $30,000, to still file their tax returns to grab those monies for Social Security, Medicare, etc. So again, if you're not sure, you probably do need to file your taxes, at least to pay those self-employment taxes. If you're self-employed, you might not owe any income taxes on it, but let's make sure you get that. So we'll be right back after this break.